Let's run through another back test here. I'm going to take you through something a bit more unusual again, just because I know it feels fairly entertaining for the audience. We'll still apply the same methodology. It's still going to be net gains. This is now 74 back tests in a row. All net gains, low drawdown. The methodology really works great. Take some notes, ask questions. Let's jump into it now. Okay, so again, we're going to move into another asset here using our Forex hedging methodology. You can see all of the clear labelled levels I've drawn here. Key support, resistance, supply, demand, whatever you want to call it. And they will be useful within this as time goes on because markets naturally react at those areas algorithmically and obviously psychologically with retail traders that make up a smaller amount of participation. So let's get into this now. There's a mean reversion here, so you've come well away from the mean. Remember, you'd be trading a multi-asset portfolio before anyone says, it's only one asset you've got here. Yes, but you could be trading many of them at the same time, as well as you're doing it sensibly. So I'm just looking how big the unit size is going to be, what that's going to look like P&L wise. And we'll go a bit more aggressive as we keep doing in these videos. You can see 74 now. This is number 74. We're always in net gains every single video with low drawdown attached because we're managing our entries sensibly. We're not going crazy on sizes. And that kind of format works pretty well. So we go 20 contracts here. You can see we are long now. Really looking for a pop on this dip. Probably having some negative sentiment come in for soybean, which is pulling it down. Remember, this is applicable to any asset, really, as long as it's not massively manipulated, like the Zimbabwe dollar or something like that. So although it is soybean, you could use this on pretty much anything. Okay, so we'll add a bit more. We've got a few longs in play here. Don't want to spread too much. A little bit of drawdown coming in, almost 2% there. So we can add again. The sizes we're using are really in line with, the amount of equity space we've got. A lot of people just don't get that. They sort of add way too much, way too quickly. And they can't handle the drawdown. If you're going to be hedging, you've got to leave yourself room for the price to go against you. You really will not be right every single time at all. But you don't need to be to make money as long as the sizes are sensible as you go. So we'll take some long gains here if we can. We've got about $234 off from that. We'll aim for about 10% in this test. See if we can get up that high roughly. So there's a short. And you can see we're fairly evenly matched with exposure, slightly to the long side, but that would be because, we've got a decent chance of coming higher within this long-term arrangement. It looks fairly sideways for the recent period. So we'll kill off that short, add another long. Let's just see where we get now. Okay, so any kind of movement to the upside would help. There's $120 there, potentially. Just need a bit of movement. That was a little bit too fast. Probably should have slowed that down. There we go. Okay, $327 out for gains, $187 out for gains. Add a short. And any drop lower would be decent here. We've got even exposure again. $89 there on the hedge short. Take that off. Now we're exposed to the long side, but we've still got that hedge short lower, which now we can take out for $92 and add another long at that key support level. See if we get a bounce. Okay, still looking for that. So a little bit lower there, add another long. There's another short. So really price getting piled down, but we're only 2.5% down because I realize P&L is high. You can see the long-term lows we're sitting at. Very, very reactive here. So I'd be confident of a bounce. I think there's a good chance we may see that. So we'll hit it long at this key support level and see where we end up. See if we can get that bounce higher. Let's have a look. So no sentiment's still kicking through. winding out of COVID time. But happy to add again. I mean, we're going slightly more aggressive. The drawdown a bit over 6%. Again, not massively threatening, but that's probably the widest it's gone within this series, which again is okay because we're going aggressive. 6% is not a big deal. So now we're really seeing the gains kick in on that long side, and you can see the drawdown now actually in positive territory pretty quickly. So had we kept going, we'd probably consider risk measures, i.e. not adding any more, potentially reducing with some of the gains we've banked. There we are, almost 1% up on that move. So let's see what we can do now. We've got a good long side entry there. Add another short, good chance of a fall here at this key level and key MAs. There you go. Still got those hedge longs to the upside, just protecting a little bit. We're 1.3% up now. And that was a decent fall off the top. You know, typically you see the recent years, a lot of the time at this current price point, that's as far as you're probably going to go. Again, we're going slightly more aggressive, and you would be stimulating gains on other assets at this point, which would also help the drawdown. But having 6% max, really not a problem. It's not very high at all. Okay, so I'll add another short. We're evenly balanced here exposure-wise. The market is very median. You can see that based on the recent history and where the price sits. Okay, just sort of in the middle of our long and short entries, which is a good spot to be in because the drawdown is going to be fairly, or the drawdown accumulation or the rate of drawdown is going to be fairly balanced. So let's have a look what we've got now. Have we got anything hiding? No, I don't think so. So we're still in gains despite all these losing entries. Probably want to pop here on that long if we can get it, potentially. So we'll take that short off and that one, just because there's a chance you may get a pop. It might be weak. So we'll add the short there instead. Being a little bit more risk averse because price is lower. And we do have some reasonable support there historically. You can see it hasn't transpired that way, so we might have been better leaving that on. But we'll see what happens now. Add along there. So yeah, still dropping. Probably could have left those shorts on. Still coming away. I'm happy to add a bit more there. You can see I've deployed 3. That's because we have a decent buffer based on the amount of gains we've already taken. We're reaching a similar drawdown level. Again, we probably could have left those head shorts, but I was willing to take a chance just in case the market rebounded. See if we could reshape things quickly. Nonetheless, we're out on that one lower for $377. May as well kill that one off. And we can add a short just because we come back to the river. $93 there. 77, so we'll take that. Now 278. And 167, there we go. Take that short off because we're at the lows, not really necessary. The drawdown's not major. Really, any kind of massive pop here, which would be ideal, will help us a lot drawdown-wise. Price is low statistically, but we'll add a light hedge to here in case. Anyway, 20 contracts. There's a pop, so we could have not added that hedge, I suppose, but it's better to be safe than sorry and just protect in case. So almost back to 100K, but because we've accumulated all those realized gains, it's only going to take a pop to recover a lot of this drawdown. If we keep going lower, again, you can see this is the key. All of those positions are in minus, but we're still not down. We're still 1.3% up because we're trading with the market as it goes because the win rate's so high already. That's really what you're going to need if you're going to be successful hedging. You've got to have a high win rate so you can sustain your entries going into loss at times. Ultimately, the longer this goes on, the higher chance of a pullback there is, on a longer term scale. you can see that we've been down here for a while. So any kind of increase would be ideal. And that's really what you're waiting for as time goes on, until you get there. So just measuring some local figures within this ranging price action, that's really where you'd have to break out of, if you like, call it what you want. If you're going to see a healing of those former longs, and how long that takes, we will be yet to see. But it's interesting just to understand that at the moment, you're caught in a range, okay? And, that range ultimately is going to have to be broken beyond the local MAs and beyond the river. Just looking for the tools here so I can find them. You can see that it is sideways, but it does ascend slightly. So it's almost like a stall, or some people call this a flag and things like that. So we'll see how price reacts at this point now, just so you can see that as well. So it'd really have to follow through momentum to the upside to help us a bit more. And you're just pending that, really. Like I said, the longer this goes on, likely at some point you're going to have some kind of new sentiment that pops it to the upside, or some reason why it rallies. And you're really just waiting for that to happen over time, more or less. So let's see if it does. A pop to the upside of this channel and the 100 MA would be ideal. So you can see already we're well in gains, 2.7%. Any further momentum is going to push us even further into gains, which should be handy. You can see it's a lot more flat now with that recent price action, this current sort of near-term sideways-ish uptrend. So there's a pop again, 5% up now. So you can see how we're really healing. We've waited and waited and waited, and now, price is reverting, probably because of some kind of sentiment case. So we can add a short just to protect. Rare that you're going to get a massive pop all at once. You probably get a dip in there. So having a short opportunity on the hedge side is wise. Just have to let it transpire with some movement if we can. So there's a full $227 on the hedge side. It's a really good place for a long. You can see we're dipping back into the river, the 2040 MA cross area. So high probability of a long side push on this key price action level. There it is, massive smack to the upside. Again, well read. Take 435 off, so almost $7,000 up now. Max drawdown 6%. So, we've survived the push the wrong way, as we were sensible and prudent with our sizing and position arrangement and so forth. So there's $280 there. This market is a bit dodgy because of the open and close times. It's getting stuck with exiting positions. It doesn't like you killing them when they are overnight, probably, or with outside of hours. Commodities obviously being like that, agricultural ones. $77 there. We're 7.5% up. 380, 175. So 8.1%. So if we can get rid of that short hedge, we may as well use the money we've made to close that, because it's an extremely high probability long zone here. Doesn't mean it won't fail, but there's a good chance you'll rebound because you've got all of the technical factors you would need: an uptrend, key price action level, dip into your moving averages. 9% up now. Add a short at this level at the top. Still 9%. Now a fall would help us. There's a resistive zone there, so it could occur. $187. So we're getting nearer that 10% target. And you can see how we've now removed all the erroneous positions before. I was just shaping things up well. There's another fall. So pop now it from the river at this key long zone would be great. Again, high probability on all those technical factors. You can see how you have a nice dip to the 40 MA. Very high probability of rejection, which occurs. Take those short side gains, and now a pop here would be good. That would allow us just to clear out. So it's still a key long zone, not as good as before, but good chance of a pop. That would really just help us kill things. We're not getting that, which means we may need to hedge a bit more, possibly. Oh, we'll add a long because we've got a decent amount of banked gains there. One more push would probably do it. There we go. It's up 10%. So we've got 10% gains there, 110k. We can add a short just to see if this turns around. If it doesn't, we're still going to be better off drawdown wise. Add another short. Okay, and again, better drawdown wise. So we've now got 10.6k, 10.5. So we could call it there, I suppose. Yeah, we'll kill off the long at the top, add another short, and a little fall would be good. And then we can probably call it quits. Okay, so 11% gains looks good enough. I don't really want to get into hedging anymore on this video. Just shy of 11%. So yeah, another clean back test, trading a whole market view, lots of ebb and flow, lots of up and down, a bit more aggressive. 89% win rate again. If you want to learn how to do this, go underneath.